Good morning, guys. Good morning, good morning, good morning. Let me see if you guys are going live, if you guys hear me or see me. Good morning, good morning, good morning. How's everybody doing? Okay, I see myself. Hi, Promise. Good morning. Good morning. Hi, everybody. Oh, I am so excited. I have such a cool show for you guys to show you today. We're gonna scalp like maniacs all day long. And I'm gonna explain to you exactly what I've been doing basically in our room and also really overnight myself. I have come to this incredibly interesting insight over the last night in terms of how to absolutely simplify trading so that anybody can make money on a day-to-day basis with the scalp approach. I'm gonna show you exactly how to do it, but I'm gonna wait everybody. I'm gonna live for everybody to come into the room because we are just we're just starting out. I don't want people to miss this. How's everybody doing? What's going on? Where's anybody trading overnight? Anybody doing anything in trade? We've had some really nice moves to the downside. Now we're starting to bounce off the bottoms, but I still think that we're actually going to be probably trading lower today, unless consumer sentiment really shocks to the upside and gives us a little bit of a boost. Where's everybody coming to me from today? Give me some cities. I'm curious. Anybody coming to me from Europe? Anybody coming to me from the Middle East? Atlanta. Well, Atlanta's very exotic. Atlanta definitely wins for pecan pie. Best pecan pie I ever had was in Atlanta. Definitely wins that. UK peeps, Singapore, Rwanda. Oh my God! Wow, coming to me from Rwanda, Georgia. Tbilisi, Georgia, not Georgia, not that Atlanta. It's the other Atlanta. It's the other Georgia. That's, by the way, some of the best food. If you guys have never had Georgian food, literally some of the greatest food in the world. I highly recommend it. This is like one of those completely hidden cuisines. It's a sort of a combination between Persian food and, I don't know, Russian food. I don't even know what it is. You can't describe it. It's just amazing. It is so good. Everything on the Georgian menu is so good. Their specialty is like this baked dough with cheese and egg on top, which is just the best. My recommendation, my number one exotic cuisine is Georgian food. There's so many good Georgian restaurants in New York. I highly recommend it. Oh, good job. Andy is coming to me from Nigeria. Nice job. Yes, best food and wine, and also best mineral water. My favorite water, Bergimi, comes out of Georgia. Brazil. Bienvenido. How are you guys? Okay, nice to see you guys. And Johannesburg. Oh my God. Everybody's all over the world for me. So this is really, really great because the approach I'm going to kind of show you requires, and then Switzerland. Yes, very nice. And what time is it in Adelaide, Australia now? Is it like 11 o'clock at night? Jonathan, what time is it? Are you just night owling with me? By the way, sort of a housekeeping announcement. I can't promise you 100% on this because I got to talk to Kay. But my game plan starting next week when SEP rolls around is we're going to go to 3 days a week. Tuesday, Wednesday, Thursday, free live trading, right? And we're going to go to what I call the money hour. We're going to trade 10 to 11 New York, which is very comfortable for a lot of people in Europe because it's the end of the working day. A lot of people really like the fact that they can, trade that. Essentially, they're kind of done with work, and they can trade the last hour, or trade the hour once they're done with work. on the trade. It's also a pretty good hour. It's a little bit late for Singapore and Asia, but it's still a pretty decent hour. It's not anything ridiculous, 10 to 11, but that is the money hour in the stock market. That is where we have the greatest chance for getting what I call trend slices, and I'll talk to you a little bit about that. That's my game plan. So we're going to hopefully change the schedule to 3 times a week, 10 to 11, the money hour. So watch for that. I'll be announcing that as soon as I get the okay from the boss, because we just need to make sure that we're okay on everything else. But otherwise, it's going to be very exciting, because this whole thing that I'm going to show you, you're going to be able to make money over and over and over and over again every single day. So without much ado, let me kind of show you the thought pattern I have. And actually, let's not look at TradingView. Let's take a look at TradeEvade, okay? And let me just take your eye. So this is NASDAQ right now. We're not going to trade anything, because I just want to explain it to you first, and then we can trade it to our heart's content. You can see I've been trading quite a lot today. Like if you look at I've been trading very, very small. Obviously, we'll talk a little bit about that as well. But where's my reports? If you look at my trading today, I had 11 trades, 10 winners, right? Just nice and clean. Really zero stress today on tiny. And I wasn't even taking all my positions. I was just grabbing 5 points here, 3 points here, that kind of stuff. But here's what I want you to look at, because I really want you to look at the chart without anything on it, so you sort of understand the principle. So what I call a trend slice is this is an 8-period moving average, right? Everybody sees that? Give me a yes if you see that. It's just an 8-period. Why 8-period? It doesn't matter, because it's a very, very good short-term constraint on trend. Basically, if price is below 8-period, it's in a downtrend. If price is above 8-period, it's in an uptrend. It's a very, very decent constraint. There's not, it's too dark. Well, it's in dark mode. I can't change that for you guys. Can I change it? Actually, do you guys know if this TradeEvade go to light mode? Can I change that? You know what? I'm not going to do it. You're going to have to live with it on the dark mode. You can see, I'm just showing it to you because I want you just to look at the principles in action. Then we'll go to TradingView and you can see it in white mode. 8-period is too light. It's blue. Like there's only one thing on the chart, guys. I mean, it's not really hard. It's just the 8-period SMA, right? That's what it's looking for. I just want you to look at the chart because I want you to understand the principle of the thing. Then we'll go to TradingView. So a trend slice is when the price action is constrained underneath the 8-period moving average to the downside, and constrained by the 8-period moving average to the upside. And there is a pattern that happens multiple times, not just once, but multiple times under a decent trend condition. A decent trend condition is when you have a movement one way or the other. Rather, we're making a pretty decent trend condition right now as we're starting to get fresh lows on the on NASDAQ. And that particular pattern is green retrace candle. This is to the downside. Green retrace candle that does not exceed the 8-period moving average, followed by a continuation candle, which is a red candle. So on the converse side, if you were doing this to the long side, you would have a red retrace candle that doesn't break the 8-period moving average, followed by a green candle to the upside, right? So as a matter of fact, right now, as we are looking at NASDAQ, we may have a setup. So let's take a look at this. We have price just hit lows of the day. This is the low of the day mark. We might have a green retrace candle. There may even be a couple of them, like maybe 2 of them before they reach the moving average. The critical condition here is it cannot close above the moving average. Once it closes above the moving average, the whole essence of the setup is sort of invalidated. The way things are going right now, though, it looks like we're just they're just going to pound it down. It's clearly a lot of selling going on in the market. But when that happens, when you have a continuation to the downside, it presents you with very, very, very easy trades to to the downside. So you could have taken this short over here, which I think I took it over here and I covered it. You could have taken this short over here. I was just too busy with other stuff. Green to red, short. Green to red, short. Green to red, short. Green to red, short. In this case, once you're in a trade, it did pop up above the moving average, but then came right back down and well above your stop. So once you sort of understand the concept, right? You guys understand the concept? Give me a yes in terms of the principal idea. So we're looking for a trend slice that is price being captured underneath the moving average. Then we're looking for a retrace move and a continuation move. Retrace, continuation. That tap dance happens all the time, all the time, all the time, all the time, all the time. That is the money. That is the money move in any kind of a trend scalping condition. We're going to trade this with the following structure. Now I trade, and I'm trading this on very, very small, micro lots, just to kind of show you, and also just to make you. I want everybody to have good habits, so I want you to start small. So it's like I talk about the idea of when you're hitting a tennis ball and they're trying to teach you strokes, they don't make you hit it 100 times, 100 miles an hour. They make you go super slow so you get the mechanics correct. And that's the whole idea. The smaller the trade, the easier it is for you to get the mechanics correct. So on NQ, I'll post this over here. It's a 10-20 stop, meaning 10 target, 20 stop, or 40-80 in ticks, right? And then in the ES, it's 1-2 stop, 1 point target, 2 point stop, or 4-8 ticks. I mean, I'm not really going for a lot. You can do much more if you wanted to. So here we have the possible conditions setting up. So we have the green retrace, 45 seconds, 44 seconds, so quite a long time. If this candle stays red, we'll go short on this trade. Now, because it's already quite heavily sold off, it could pop back up. It could pop up, and if it does, that's fine. In other words, like this is a trade that that could stop us out. Even if it gives us a signal, it could just retrace hard. But we're going to take the signal because I want you to sort of understand the trades. 14 seconds left. Once we're like underneath 10 seconds left, I'm probably going to get into the. Okay, so ask. Okay, so I'm in the trade a little bit early. 2 seconds, still stayed red. Let's see where we're at now. It kind of dropped low, but then came back up. Let's see where we're going. Shit, sorry. Too fast to market. The reason I try to cover this up is because I have very little faith in the fact that it's going to go down to the lows, and it probably will go down to the lows. Mainly because, and it would have totally worked. I just covered it. I covered it a little too fast because I was trying to get the this dip over here, but the markets were just too fast. The reason why I didn't think that this was going to kind of feel is because we're already at session lows. We're already sold off really, really hard, and this actually is creating a little bit of a bounce condition. And one of the cool things now, this is not what I want you to do, but I'm watching this very, very carefully. If this trade does not break the lows, you can actually use this as a reversal signal. Okay. Okay, I'm in the trade. Now, this is not a trend trade. This is a counter trend trade. But one of the things that's very, very cool about this is you can also see how this creates counter trend conditions really, really easy off the bottom. So I'm trying to get this up here. Come on. It's not really moving up as much as I wanted it to. What happened here? Am I double sold? Hold on. Exit. What's something? Sorry, I don't know. I must have had two orders on trade here. Sorry for the confusion. Let me get clean here. I want to get buy market. I'm buying this long only because this is a counter trend trade in my opinion. Not because this is a good trend trade. I'm probably going to eat this. I always make the mistake of trying to buy bottoms and sell tops, but I'm just having fun a little bit on this particular trade as far as it goes. But it's actually, look at that. No, I'm eating this trade. Never mind. So we're going to go on this particular trade. 24 seconds left. If this candle stays red, we're actually going to go and trade this to the downside, because this actually is a continuation trade to the downside, right? I sort of, putzed around trying to buy the bottom here, but it's actually, I'm going to sell market. Where am I? It's 36 on the limit, right? I sold the bottom here. It was a very, very large downward trend, and I definitely bought the bottom here. But I'm gonna try and trade my way out of it. Just 1 second. Let me see if I can. If this. I'm rushing this. I should have waited till this candle closed because I needed to see the candle green. I'm getting killed both ways. All right. What's my target? 78. 78, 78, 78. So the only reason I'm sort of breaking all my rules here, and I'm just honestly I'm just having fun with with picking the bottoms, is because we are at session lows. We've had a lot of bottoming out here. I should if I was long here, if I was patient enough to let this trade it, I would have been able to totally TP. But I bought way high up, and now I'm just basically nursing this thing, trying to see if it will hit target at 78. And kind of repair me. Now, again, ignore everything I did here unless you kind of understand advanced trading. This was not trend, obviously. This was counter trend. But one of the very cool things about how this setup works is that you can really see the bottoming of the setup, as well as trend conditions. So just to let you kind of know what's going on right now, we are now positive trend conditions, right? We're now came right back up, came positive, and now what I really want to see is a red-green combo, and then I'll go long, and I'll trade my way to the positive side. Now, if we don't have a positive trend condition, what's going to happen is the red candle is going to break the 8-period SMA. It's just going to completely destroy the upside trend, and then we're just going to wait and see. But what I'm seeing on the chart here is basically trend to the downside that bottomed out a little bit here. It bottomed out, and now it's trying to basically create this little curvature to an upside trend. And as long as we're patient, and I'm going to try to be very patient with you guys, we can try to get this thing to the upside. So right now, what we really need is a red candle and a green candle to go to the upside. Okay. How do I get the minute counter to appear? It's a free indicator called Ladder Day Trader. Ladder Day Trader on TradingView. Okay, that's where it is. So very, very sharp turn to the upside, which is good. That's exactly what we want to see. That, that's a good sign that we we made a strong bottom. And now we're looking for a correction and a resumption of trend. So we have to just be very, very patient for a red green combo, and just let that play itself out. You see the really, really strong bounce off the bottom, and that was the reason why I sort of felt that there was going to be a turn is because when you have the flip side, when you have the really, really strong sell, and then you have a green candle to the upside, that's a great candle for a reversal. It's a great candle for for a possible reversal on the trade, and that allows you to kind of buy the bottom. Again, not the primary thing of the setup. The primary thing of the setup is you're supposed to ignore all of this and just trade the trend. But for the inveterate bottom and top pickers, this is a really, really good way of picking it up. Right now, really, really strong uptrend. This is the third, fourth candle to the upside. So we're just staying very patient, waiting for a retrace candle and a resumption candle for us to get into a trade condition. All right, red candle, green candle. So now I have 57 seconds, quite a long time. This may be a couple of red candles. We have to see. It may want to try to come back down to the moving average here. But if it doesn't, that's going to be a trade for us to go long. Just going to lower my size a little bit here. $29 seconds, 30 seconds left. Until it gets to about 4 or 5 seconds, I'm not going to position myself into a trade. It's really stretching out. Wow, it's really running away. It's annoying. Okay. I'm in the trade. Target is going to be 40. So we're going to try to see if we can get up to 40. And there we go. And you see how it's like a power vacuum, right? I mean, it's just so fast. That's what I mean about the power of this setup when it's done right. It's a whoosh because there's so much momentum on your side. All you're looking for is just that pause, resumption of momentum, and then we caught a very, very strong V-shaped move. And I will tell you this. I'll tell you this, guys. This is where I used to make. Almost everybody makes this mistake. Everybody thinks, "Oh my God, it's a V-shaped recovery. I'm going to try to short the top here." It's definitely it's too powerful a move. The exact opposite is happening. You want to get long that move as much as possible. You can see I only took 10 points out of it. If you have a better personality and temperament, you could have taken 20, 30 points out of this thing. This was just a massive move. You could have loaded up on this position and gotten really, 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 really strong. And the thing about this is that you see this pattern literally over and over again, not just every single day, but every 10, 15 minutes, right? Retrace, resumption, and you could trade that condition really nicely. Now there will be a time, absolutely, where this retrace resumption is going to die itself out. So maybe this first trade, second trade, third trade may be too high. Doesn't matter. The key thing to what I do is I'm always trading small, so that I can then if I'm stopped out, I can then wait for the next setup and double up my position and pretty much erase all of my losses. And this gives me lots and lots of opportunity to to basically stay flat and then stay profitable. So the idea is profitable, then you get flat, profitable. So we still continue to to be going up over here. Nasdaq still continue to be racing. It's 51 seconds left. However, this is a very, very big extension. So I'm going to get a little bit more conservative. I'm going to lower my size to just 1 because I think it might be it's definitely, this kind of parabolic move is really, really strong. Having said this, though, never doubt the parabolic moves. They tend to be much stronger than you think. So we got 25 seconds left. We basically came up like 100 points in the last 10-15 seconds. Let me see if I can buy the bid here. 11 seconds underneath, 9 seconds buy bid. Okay. So a little bit early. And it may retrace on me. I mean, I may have bought the high here, and I'm perfectly okay with that because I want to show you the setup, and if it doesn't work, we'll regroup ourselves on the next setup. I mean, I knew this was a parabolic move, so there's always a danger that this one could retrace and stop me out. But I'll get long double the size on the next condition, and we'll. So fine, we're stopped because we're so far away from the moving average. You could tell it was just really, really, really far away. So we're going to wait for the next setup of a green candle, and we'll get long then. All right, greens, reds. May touch the moving average. If you go down below, come back up, I'm a buyer. So as long as I get a resumption of the green trend, I'm fine. But this was obviously it was a very, very corrective move, and it needed a little breathing space here. So I knew I was buying the top, but I wanted to I still wanted to show you the setup, and also I'm a huge believer in showing you the stop outs because you need to understand that the way to win is to have a plan after the stop out. And if you do that, you're going to do much better. No, this was the setup. It was just, I just knew like the setup was red, green. I bought the green, even though I knew that it was very, very high up. The reason I bought the green was because I just wanted to I just want to get you comfortable. The setup is red, green, red, green, red, green. You just keep doing it. Now, if it's a super parabolic move, you may have 2 or 3 winning trades, but occasionally you're gonna buy the top. Now, what's interesting now is let's watch this. Now we slipped below the 8-period moving average, right? Although we may recover it, so we have to see. We have to see how the candle trades. But what's interesting, I was going to say is, have we gone now to a full corrective mode? So if this turns red, right, and we stay underneath here, and then it starts to sell off, and then it becomes green, then we're going to go into sell mode. We're actually going to, because now the scalping direction is dictated by the location of the moving average. So we're underneath this, and if it starts to go down, that would again suggest to us that maybe they want to test the double bottom here. But we have to see, how we'll let the price action show it to us. Like right now, it's green. Is it recapturing the moving average? It kind of is. I try to buy it. I'm in here. Let's see if we can do it. It's not. This is not the best of the setups because it kind of recaptured it relatively weak, and I probably should have waited. I mean, the way I really want to trade it is I want to wait for it to trade above and then retrace and trade below. The retrace should kind of hold the moving average. Here, I rushed the trade a little bit to see if we could, pick up the retrace. Let's see if it'll work for us. The target is what, 53? I'm at 53. 45. We're looking for 53. We'll see how that's trading out. It doesn't look like it's going to hold. We'll see. Remember, there was a lot of buyers. They ran into resistance here, And in order for it to really establish the trend, you want to be patient and kind of like, for example, here's they establish a trend here. You want to be patient and come back up over here. Oh, I got done. Oh, it's 10 o'clock. Oh, I know what it was. We were waiting for the. I'm sorry, guys. I ran you into news. I totally forgot that we're in news. So we got lucky in the news. The consumer confidence numbers must have been really good, so they blew up. I totally forgot that we had news today. This is another reason why I love to trade the 10 o'clock hour, because after 10 o'clock there's no more news, so we're not at mercy of anybody out there. Let's see what the news was, by the way. 103, really, really strong. So it's much stronger consumer confidence. Okay, so it's a much stronger consumer confidence number. But look how it's turning around. Wow. So they sort of sold off. So if you're looking at a pure technical analysis of this thing, if this turns red, then we're going to, we look like we're, basically making a kind of a double top here. If it stays green, then we just wait patiently until it rebuilds a trend here. Trend with a retrace resumption, then we're going to trade that. We'll have to see. It looks to me like it really needs to clear this whole area over here in order for us to have a continuation of a trend. But as Yogi Berra said, I'd rather be lucky than good. We got a little bit lucky. So now we get a little bit red, and we have to be very, very patient in terms of seeing if this indeed is going to be a negative, a sell-off trend slice. For it to be negative, you have to have a couple of red candles underneath the moving average, green, red, and then a green, red. For it to stay positive, you have a couple of green candles above the moving average, and then you have a green, red that keeps the moving average underneath them. The key thing is to, as I said, trend is always encapsulated by the moving average. So as long as you're above it when you're buying, you're in good shape. As long as you're below it when you're selling, you're in good shape. If you can remember that, you pretty much can remember everything. So right now we're flattening out, and this is another interesting thing that you can see it on the moving averages. You're basically flattening out on the moving averages, right? Yeah, everybody's telling me about the news. I totally forgot about the news. So we're actually, boom, 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 back to highs. Formatting ourselves above the moving average. So we have to have a positive bias until proven otherwise. And we'll see how that trades out. Now, I haven't even looked at the S&P, which is kind of interesting. S&P is sort of, I guess, following the same pattern. But, S&P also would have given us really, really nice trades. So if you don't want the insanity of NASDAQ, I've sort of traded NASDAQ with you for a while. We can change our attention to S&P. This is and again, I'm going to just trade, micros just to show you the small size. But with the S&P, I always trade, I would generally trade the minis because it's a $50 trade. Every time I hit it, you can hit like, 5, 6 of them in a matter of an hour and a half. And you're up $250, $300 very, very quickly. So S&P is a really, really good trade for this particular setup. The NASDAQ is just very, very, hot and exciting. So I wanted to keep your attention on it. S&P breaking the moving average. So looking a little bit negative here. It's interesting that let's see was there anything? Well, still positive, continue to weaken, and assessments of labor market going forward. Oh, that's what it was. I was wondering how come so basically they bought it on the print, but now they're kind of looking at it. They feel that the consumer is starting to feel worried about the job conditions, so they're not really loving the negative bias is resuming itself, and you see now the negative bias in the S&P holding because now we're below the moving averages, right? Where's the NASDAQ? NASDAQ is trying hard to hold the highs, but we know one of the key things that you really absolutely want to avoid in this setup is the chop around the moving average. That's where it doesn't have any directionality and any certainty. The moving average flattens out. You see that? And it's just very treacherous territory. This is nowhere near where you want to be trading it. You want the moving average to kind of get sharp. The slope of the moving average either go up or down in order for you to have some confidence in the instrument. Let's see what the S&P is doing. S&P started to go back up too. Okay. All right, let's watch the S&P for a little bit. Let's see how this is going to trade out. So again, see, touching the moving average, not really, market is not made up its mind as to whether the buyers or the sellers have the upper hand right now. But we'll continue to be trading relatively strong to the upside. You guys following the logic here in terms of how you want to trade this? So now I got a couple of clean green candles to the upside. Slope is up. A little bit of a retrace here. See if it holds. This closes below the moving average, then the whole upside bias is done. This looks like it actually might end up green again. The most important part about the setup is to be patient enough to wait for that green-red combo to the upside, or to wait for the red-green combo to the upside and for the green-red combo to the downside. So right now we have the red piece of it. Maybe not. Let's see. 4 seconds. 3 seconds. All right. Red on the S&P. Now the cool thing about this, and this is what makes this setup so good, is if this just turns into a sell-off, all you're going to do is see a whole bunch of reds. You're never going to enter a trade, because the very, very important part is you need the market to prove to you that the direction you're choosing, which is the upside direction, is confirmed by the price action. In other words, the price action isn't confirming your upside bias with a green candle. You got no trade. You got nothing to do, right? So right now they're kind of testing it. You see that everything is really, really consolidated around this 530, 525 level in the S&P. Nobody wants to do anything either way, and we're just staying flat. We're not doing anything. Right, 8, 9 seconds. All right, now this turned. No, didn't quite turn. I was like, maybe it turned positive. I would have gone long actually this thing a little bit, but like we'll give it patience right now. If this candle stays green, we'll go long this candle. If it doesn't, we will let it go. But you see like the price action really, really chopping. And the best thing to do when the price action is chopping like this is to actually stay away, right? The really, really great way to trade is when you have that clean, clear trend slice, and you could just boom, 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 make the P&L. Does this strategy work for Boris? I don't think so. This is super fast. I haven't even looked at the forex. This is a strategy really designed for super fast markets. When you when you have it's a 1 minute strategy, so you have like lots of trade opportunities on this during the hour. Today it's a little bit flat. We're not getting too many opportunities. What's the NASDAQ doing? And NASDAQ would have given us a tiny little trade here, maybe. Let's go to S&P. Let's see what the S&P wants to do. Waiting patiently because this kind of price action doesn't really, leave you with huge amount of confidence that this is an upside trade. I really want the candle to finish. All right, I'm gonna try a buy bid. So I'm long this, and 53.50 is my target on the S&P, and I'm done. And I'm done. Now this was a very small trade, obviously, because again, I just want you. I'm doing small trades so you guys can do small trades and learn the setup. But um, one of the things, by the way, things we're going to do when we come back, when I'm going to be. This is like the fourth or the fifth, account. This account was 25,000, I think, yesterday, or maybe 25,100 with you guys yesterday, and I ran it up to 600. I'm hoping to. I need 26.5 to get funded, so I'm hoping to run this up to to funding level, and we'll have 4 or 5 funded accounts, and then I'm going to trade them, in larger sizes. What I do normally, this would be a $50 trade for me. I would have taken the S&P, boom, and S&P is a great instrument to trade this with on like a mini contract, so $50 per trade, because if you sort of follow the rules here, $50 here, $50 here, $50 here, $150 in a matter of, was it 9:49 to 10:13, about 30 minutes, right? So maybe an hour two on focus, and you're at $250, just a really clean trade. That's at just one S&P contract. If you wanted to trade more, you obviously could trade more, but I love this, like 1-2 setup, because again, if you, as you see, it's very easy to make 1 point in the S&P as long as you got the right positioning, and this thing just gives you a really good positioning on the trade. You just have to be very patient. This was obviously very choppy price action, and one of the cool things I love about this is it forces me to not trade the chop. I'm not, it just makes me wait until there's a clear signal, and then you trade it. Do I ever use the VWAP? No, I don't need to. I don't, like, honestly, you don't need to do anything complicated. Price is either going to be above 8 or below 8 in trend. Like 99% of what you need to know is, that's why I said you just need one single line, to make it viable. Now the cool thing is, we obviously also put all of this into an indicator, and you can see that this is the upside. This is the upside signals. This is for the S&P right now. It's giving me an upside signal. 20 seconds left to go. So if this candle, closes green, it's going to be another upside signal in the S&P. That may be worthwhile taking. So the trading view indicator really gives you sort of clear visual cues of when all these trades. You can see, like in the S&P, 1, 2, 3, 4, 4 winning trades. Sorry, I missed this trade. I'm talking, so I didn't take it. But just to give you an idea, this is 4 trades in a matter of half an hour, right? Let me just look at the NASDAQ. And NASDAQ also had a signal, 1, 2, 3 trades in a matter of half an hour. So like, if you sort of say to yourself, okay, I have like realistically 3 trades during the hour, just to minimize my, minimize my data, because it probably could be more. 3 trades an hour. I have 2-3 hours of trading. I have like 9-10 possible trades, depending on what size. Let's say you make each trade a $50 trade. Obviously, not all of them are going to resolve. You're going to have to think, this one, for example, probably would have failed, right? But then you go back and you wait until you get the negative trade here to the downside. So like right now, we're clearly turning a little bit lower, right? If you look at NASDAQ, and NASDAQ may actually be a sell trade here if it gives up this moving average and starts to bro down. Assume you could resolve just on in 2-hour period 7 quality trades at the smallest, like a $50 risk, which is a very small risk. You're talking about $300. That's you get funded basically within 5 days with very little risk, to your idea. Very little risk to your capital. Like I'm not even remotely close to triggering any kind of stop levels. If you look at my report P&L. What's my drawdown today? $90 was my worst drawdown today, and that was a stupid drawdown. It wasn't because I was trading flow; it's because I was trading counter flow. If I didn't do that kind of sharp stupidity, I would have had just even very little. You can see very little drawdown. When I was trading by myself here, you see how clean and clear everything was. I got a little bit chopped up here, but remember, I have a whole day in front of me. Now, if you have a day to devote to this, if you have 4 or 5 hours to devote to this, you could go make $500 easily using this. Easily, just simply knowing how to trade this. With a patience and precision of entry on the trade. What really helps, of course, is to have right now the markets were down 50 basis points, and now they came back up to flat. So there isn't much directionality. So if you have a directional day, then it's super easy to make markets. And actually, in a directional day yesterday, I got large. I took large NASDAQ trades, and it was great because you made like $300-400 in a trade if you have a lot of confidence in the trades. Once you get comfortable in the setup, it really becomes very, very clear. So now you see how the setup is starting to show a sell signal in NASDAQ, right, to the downside. So here we are, just to show you. Well, not quite. So we're underneath the moving average. We have a green, and we need a red. If we get a green-red combo, that's going to give us a sell signal on the trade, and we can try to trade it the other way. $21 seconds left. The key thing is just to be very patient and make sure that you have the red candle in your direction, in your position here. 6-7 seconds. I'm waiting I'm going to let this candle complete because it seems like it doesn't want to. I missed it. Okay, so now I got to exit it out. Sorry. So you see how they dropped like a stone. If I sold this market, which this is what I should have done. This is my mistake. I said I'm going to let the candle complete. If the candle completed, I should have sold at market, and it would have been super easy for me to have captured the points. So because I missed it, there's no trade. Do not chase this trade. The stupidest thing you can do is chase the trade to the downside. Wait for another green-red combo. It will come. If this is a truly large sell-off slice, there'll be another green-red combo, and we'll get a chance to trade again. If this is just a little bit of a consolidation underneath, and we're going to pop back up, you definitely don't want to be chasing the trade to the downside. You're just wasting your time. But regardless, even if you make the mistake, if you're trading small, you have second opportunity, third opportunity to kind of resolve those trades without much problems. So this is the whole thing, is just to be super, super patient. But you see how once it went green red, it dropped like a stone. It was super easy to capture. Excuse me. I'm still feeling my allergies here. I can't believe it. And this is all happening with us just basically trading the last 35 minutes, right? You see how many good opportunities we have here. Yeah, it's illiquid. You're right that the markets are illiquid. There's little directionality. This is obviously absolutely not the ideal situation. But even that's what I'm trying to tell you is, even in a non-ideal situation, even in essentially wag the dog following its own tail type of a situation where we're just following price action, this setup is so disciplined, so well orchestrated, such a great structure that it doesn't trip you into too many bad trades. You see me, I haven't done too many bad trades today, right? I literally, the bad trades I did today were completely against the setup. They were just me fucking around on a reversal move. But generally, you see how it's keeping me very much at bay, and most of the time keeping me on the right side of the market, right? So we recovered the moving average. Was just staying patient. We're Trying to see what's going on. Let's see what's going on in the NASDAQ, by the way. It's interesting. Let's see if NASDAQ is still also nothing is going on in the NASDAQ here. I was going to say, oh, maybe NASDAQ has a red candle, but it doesn't. It's just, it's just also everybody is. You see how it's flattening out over the moving average. We had a little bit of a trend burst, and then we kind of flattened out. Now we need more of a trend burst. It's still pretty much an upside trend burst for the time being, but the market will tell us. It could also be quite negative on the move. Here's the S&P. Nothing is going on, and since nothing is going on, I'm not doing anything. Is there an MT4? This is a futures trade right now, so there's no MT4 for futures trades. Could this be done on CFDs? Absolutely. And we do have a tool that does that. Yes, that could trade this, but you would have to be a manual entry. You still have to. The tool itself could give you buys and sells, but it's a manual entry. Okay, so let's watch the charts here. We have a possible long setup in the S&P, right? So you're watching this right now. You're above moving average. There's a red that held the moving average. There's a green. Looks like it wants to burst highs. 40 seconds left on a trade. So a very, very long time. We need this thing to stay green in order for us to legitimate the trade, right? Because I think I stay on one because I haven't. This is a new trade cycle for me, so I'll stay on one. 18, 19 seconds left. Let's wait. When it gets down to underneath 10 seconds, I'll probably go buy bid. Could I get it? Do I get it? I got it. I got it. Order filled, and I am looking for 31. Order filled. Boom, boom. That's it. I'm done. Now that's why I love the S&P, because the S&P is just sort of a super clean trade for one candle for one tick trade. But you could do this. Imagine doing this. If you had a $250,000 account, you could do this with 10 S&Ps. And this is the good thing about the S&P. The S&P is liquid enough for 10 contracts on a clip. So you could this could have been a $500 trade if you wanted to be, instead of $50 trade. And imagine doing 10 of these a day. That's 5,000 a day. Now, not all of them are going to work. Like I said, I don't want to lie to everybody. I don't want to be the bullshit guru that says, oh, this is the greatest thing since sliced bread. But it is the greatest thing since sliced bread in the sense that it works most of the time, which is the greatest thing I can say about a setup. If it works most of the time, then you have the edge. And if you have the edge, then you can do so much with it. You can do small, you can do large, you can do whatever the hell you want. But at least you have the edge, right? So again, everybody saw this, red, green, boom, boom, trade done, right? Somebody's saying the chart is too small and you can't see clearly. I don't know what to do about that, actually. I'm on full screen here. I mean, I guess we can get bigger. Maybe this is actually, tell me this, guys, if this might be, give me some feedback, because I'm trading off of I'm going to be trading off of Trade Evade. Yes, we have the trading view indicator, and it's really, really clean to see on the trading view indicator. But for me to switch back and forth is very, very hard. What I do in real life is, obviously I have 5 screens on me. So I wonder if I can, big move up. I wonder if I could take a picture of what I have. My setup is, Jesus Christ, I gotta really peel out. I'll show you tomorrow, guys, with myself. But I have a huge amount of screens, and of course, in real life, I'm trading off of one screen and watching trading view on the other screen. So, it makes it much easier. But if I'm switching around, it's much easier to do this way. So tell me yes, no. Is this a little bit better in terms of, trade evade? Like, is this a better screen for you guys to look at? And also, by the way, when obviously I have multiple screens, I can also pick up a lot more opportunities. Here's NASDAQ starting to get long and strong, right? Starting to pick back up. So we can look for retrace continuation trades here as well. Oh, it's a 720. Yeah. You know what? Tomorrow I'm going to try and do 1080. That's actually the big problem. It's a 720. I see what you're saying. Okay, I'll try to make the visuals a lot better tomorrow. This will give you a good reason to come back to me tomorrow. But you get the principal idea. You guys have your own charts. I'm sure you're all watching it on your own charts. Look at this big move, by the way. This is what I mean about, and I absolutely shortchange myself on this particular setup, because if you have the personality type to hold on to this, or if you have the personality type of get 5 contracts and just trade one and then hold the other one to 5-6 points, you have very often this setup is the start of an explosive move quite often, right? When it just gets flat of the moving average, retrace, boom, it very often it will take off like a steamer. You can see the same thing here, retrace, boom, boom. There's usually like 5-6 points behind that move instead of just one. So there's a huge potential here for you guys to use this in a much more profitable way than what I'm showing you. I'm just showing you the very, very high probability scalping setups, but the high profit setups can really be much better than that. All right, watching the S&P. Oh, I got it. Damn it. Oh, I can't believe time has gone by. I have a meeting, guys. I got to go. Oh, that sucks. I would have loved to trade with you a little bit more. Anyways, the 10 to 11 hour starting September, definitely going to be the money hour. That's when we're going to start really, really trading it hard. I got to run. Everybody, let me make sure. I haven't even pitched anything today because I really wanted to get you into the trading. Everybody, get Apex. They're running out today. Last chance to get 80% off. Get like 5-10 accounts. Trade this on 5-10 accounts. You're going to go nuts. You probably fund one account within a day or two using this setup, okay? All you got to do is just simply use the setup, and you will absolutely be confident that you can fund it. If you want my coaching, make sure you sign up for PTP, Pass the Prop Academy. If you just want to try us out, here's the link to try us out for a month, okay? And finally, make sure you guys try the Gelber Group, which is a real prop trading group that is looking to hire people. And if you enter their contest, you have a reasonable chance that if you do well, you might be able to actually get hired with a salary as a prop trader. So all of our sponsors, right in the links. Do me a favor, if you guys really enjoyed this, absolutely, take one of these links and pass them on to your friends, and actually get everybody in the room tomorrow. All your friends, anybody who's interested in trading, have fun. I'm going to do this with you guys tomorrow. I'm going to do it at 1080p. I'm going to try and do it at large screens so it's really, really visible. And you will see just how well this works. And then next, in September, we're going to start with the money hour, and it's really going to work very, very well. So we're like, this is by the way, green, red. I got to run, so we're not going to be able to. I'm just going to try to see if I can buy this bid. Okay, I'm in the trade. I'll let you guys know how that worked out tomorrow. But I got to run on the trades. Come on, move. Because I have a meeting. Come on. It was right there. Come on, hit me. There we go. Come on. All right. Anyways, I'll leave you guys be. I hope you guys really, really enjoyed this. Tomorrow, we're going to do a lot more of these trades. And you're going to see how well they perform. I'll see you guys later. Bye-bye. Oh.